Hey there. So today is 19th 1 2025. Sunday. Markets are not open, but I wanted to do a trading video regarding my system and process. So I basically have three aspects to my trading. Uh, one is the first one is gonna be psychology, and the rest is strategy or system and risk management. There's only three aspects to trading, okay? And I think these are the same things which keep getting repeated by even other people in the financial markets. So I'll go over these three main topics in when it comes to finance and trading. So today I'll get on with trading psychology and how I have systematized my trading psychology. So the first thing with trading psychology for me, which is very important, is patience. And patience is so important in trading, because I'll tell you 90 to 99% of what trading is just a waiting game. And I think this is why majority lose, because we don't have patience. When I say patience, we need to have patience to wait for the right setup. Wait, and once you wait for the right setup, you have to be patient to wait for proper confirmation to take that setup. And after you take the setup, you have to have patience to let the trade play out. You see what I'm trying to say? Patience is there in every aspect of trading, and after you wait for the trade to play out, you know you might think that is it, but there's still a lot more patience which comes in hand, basically, with knowing to trade with the trend. You have to have patience. When I say patience, it also means not being impulsive. you know so main thing why people lose is they are very impulsive when it comes to trading. You're constantly getting in and out of positions, and that same impulsivity leads to over trading, okay? And because of that over trading, you're not holding your trades, so it is like a cycle. To put it, I can show you just a second. I mean, okay, the text box, bear with me, sorry. I'm sort of new into this presentation space. So what did I say? Impulsivity, okay? Impulsivity. Okay, it leads to over trading. Basically trading in both direction without knowing which. One thing I've noticed over a long time being in trading is never trade both sides. You may think that, oh, you can make more money trading both sides, but in the long run, and even in the short term, it won't benefit you. Even in the long run, your psychology is going to be horribly affected if you don't know where the trend is. Never trade when you don't know the trend. Always trade with the trend. You can not overtrade, you can add to your positions if you know the direction of the trend, because ultimately the market moves in the direction of the trend. And 70% of the time markets can be trending. It doesn't have to be trending on like a higher time frame, but markets do create shorter trends within certain time periods, so you can trade with the trend. So 70% of the time markets can be trending and 30% range bound. And if from impulsivity you lead to over trading, okay, and from over trading you're not holding your trades. Basically the secret in trading is to hold your trades, and I've seen at least minimum good trade takes at least one whole 1 hour candle to play out, even if you want to scalp. I'm telling you, it's not joke. So you already have to know a prerequisite rule, that you're not gonna overtrade. Why I'll tell you, even a good trade takes at least minimum 1 hour to play out. I'll show you in the 15-minute candle how it is. So basically, if you see like the 15 minutes candles, you see once a candle closes green in 15, or even if you drill down to 1 minute, you'll get a precise entry at pivot points. If you take a trade, it takes 1:15, 2:15, 3:15, minimum 3:15 minutes candle to get a good trade. And as the same, at least minimum 1 hour. See, as I said you here, it was like a 3:45 minutes to 1 hour candle move, to get a good trade. And sometimes you can see the market is here range bound, and in these situations you actually can know it if it is range bound through experience. There's something called as price, momentum and timing, which I have designed. It comes in my system, which I will go over later, but I just wanted to come over it. Like, the thing is, with experience you know when to trade and when not to trade, and you also get a feel for the market. Like, the professionals always say this, like they get a feel for the market, like how the price is building up and moving. Okay, so I'll get over this later. So for now, this is the thing, impulsivity leads to overtrading, and overtrading leads to not holding your trade, and so impulsivity is very bad. Just choose one direction. See, you can never know where the market is going ultimately. It's a game of odds, it's a game of probability. I mean, you might have an accuracy of 70 to 90%, even in the highest possible setup or a good setup you see, but then there's always uncertainty. This is where following the trend minimizes your risk a lot. When you follow your trend, your accuracy can increase to 80 to 90% during trending markets. Because if you choose one direction, what happens is your market can go down, but then ultimately it goes in the direction of the trend. So if you keep adding to that position, you can trade with the trend and be patient. So this is the first rule of trading, patience. And I think this is what 90% of the trading is. If you master patience, I think rest of the qualities come naturally. So which is the second one is discipline. Okay, so the thing with discipline is you need to know when not to trade more than you need to know when to trade, because there's gonna be a lot of times where you don't have to trade, because as I said, clicking your mouse button doesn't even take 1 second. I feel it's millisecond of a job for you to be able to click the mouse button to buy, to place an order, or to sell. So now what's the rest of the thing? If it takes so less time for you to even place an order or sell an order, like what's the rest of the thing? It is waiting and being disciplined. So there's a lot of the times in the market you have to know when not to trade. more important than knowing when to trade. And discipline comes in a lot of other ways. Uh, but yeah, discipline is very essential. Your discipline to journal the market, you need a journal. This is another thing. Like, trading is based on patterns, and if you are not aware of the patterns that has taken place before the market, or is going to take place after the market, then it's gonna create somewhat of a dissonance in your trading. You're not really sure of what the market is doing. That's why you need a discipline to maintain like a journal, or like a pre-market, post-market analysis regularly. I mean, otherwise you're gonna be trading like a gambler. Trading is, it's not an unprofessional thing. If you want to make trading unprofessional, it can be hard as it gets. Like, you have to keep it professional, and you have to have certain rules and guidelines. So when I say for discipline and trading, it also means having certain criterias. So having your system is also a part of discipline. You have to know in the back of your head what your system is. For example, my system is basically I follow the trend and trade with the momentum, and momentum sometimes comes with timing, only during certain timing. That's why I have called that thing as my own thing, timing and price momentum. And next thing about discipline is knowing how much trades you're going to place per day. That also is a part of discipline. It also comes in risk management, and risk management is strongly associated with discipline. So for me, I limit my trades to 1 to 2 or 3 per pair. Okay, because one thing I've noticed, too many trades you take, you can end up making losses. Whatever you make, you're gonna give it back to the market from over trading. I don't know how it works or what it is, but over trading can be destructive sometimes. And another thing is, like, good trades in the market, what I have seen is very few. Because if you see the 4-hour candles, each 4-hour candle creates a trend, like move in one direction. I mean, if you drill down to the 4-hour, you might see in lower time frame there would be a lot of fluctuation. Even in 1 hour there might be a small pullback within that 4-hour range. Or you can see multiple consolidation again in the 15 minutes, and even 1 minute you'll see a lot of fluctuation. But ultimately that 4-hour is going in one direction, if you noticed this. So what I say is, you have to have the discipline to trade with that 4-hour trend, and if there's only 6 4-hour candle in a day, and let's leave 2 of that 4-hour candle as like consolidation, okay, and now you're left with like how much, maybe 70%, okay, of the price action, which I basically said can be trending. So let me do a quick calculation. Yeah, pretty much that 2 4-hour candle is gonna equate to 30%. 30% of the time market can be range bound, and the rest 70% it can be trending. So you already have like 3 to 4 chance in the market. If you know one 4-hour candle is moving in one direction, why are you gonna be trading impulsively in all direction? There's no point to it. This is why you need to have the discipline to stick to certain guidelines and rules. Like, more than trading, you should be knowing when not to trade, because there's gonna be a lot of time you don't have to do anything. You just have to sit with your hands under your seat, and you're gonna be making money. It's about holding the trades. And let's go on to the third one. So basically, in both of the above, the patience and discipline, I spoke about trend, and I think flow is similar to trend, but also the flow within your own state of being. Your own state of being have to be very fluid for you to be trading. And flow for me is about adaptability. You can't be rigid within your beliefs that you don't see the flow of the market. Because when I say trend of the market, you can't simply trade with the trend without you being adaptable to that flow. Like your being has to sync with the flow of the market. This is what I mean by flow. It's not just pure trend. Okay, trend becomes one-sided, but when I say flow, it is also your own inner state of being, which has to sync with the market. And when I say flow, it also means not to hope. And I think hope is one of the biggest factor for, like fear, greed, overconfidence. I think a lot of people do hope trading. Basically, what I mean by hope, I'm gonna give you example. And a lot of people do this hope trading. So what basically hope trading is, see, now the market is kind of showing a bearish signal on 15 minutes. And if you see 1 minute, we have a pivot signal of bearish close. There's a rejection. Now what you're gonna do is, you're gonna hope that the market is gonna go up from here rapidly. When there's a rejection right here, you end up buying. Now if you buy, what you're hoping that the market may go up. Okay, I'm just giving an example. This might not be precise, but see, now let's see what happens. Now you're basically hoping that the market may go up, but what the market does is what it has to do according to what it just showed. So we will get back to it. So another thing is hope trading, and you have to trade what the market shows you. Like, not your own hopes or beliefs or what you want the market to do. See, this is another thing, and this is the biggest thing I think is with the trading is, we end up like we hope because we're trying to predict the market. Predicting the market is another bad thing. You should never predict the market, but you should just flow with the market. You should trade what the market shows you. Don't predict the market. Okay, I'll put a big X. Hope and predicting is a no. Okay. And this is it for flow. I mean, I could go on more about flow and a lot of these topics. Let's continue. But so the fourth is confidence. So you might think, what does it mean to be confident in trading or trading psychology? So how does one even acquire confidence is my question to you. And trading confidence can be only achieved through experience. And what is experience? See, one thing I always say, another thing is, trading is a behavioral game. Okay, your behavior influences your trading a lot, and if you keep doing the wrong things, the same thing you're gonna keep repeating till you correct it. It becomes a pattern. All of your behavior becomes a pattern, and that gets reinforced in trading. I hope you get what I'm trying to say. And if you do good pattern, like if you keep trading the right way over and over, it becomes a pattern too. So that's the pattern you have to develop, and that's how you gain confidence, by being right over and over, and building your system, your risk management and psychology, and consistently doing the right thing builds experience, and that experience leads to confidence. Okay, so let me do another flow. Basically, you have to create right trading, you know which builds your behavior, because trading is a behavioral game. Whatever you keep doing, if you keep doing the right things and you keep repeating that, it becomes your behavior pattern, and then that leads to experience. See, experience can be good and bad, so you have to create that good profitable experience, or doing the right thing, following your right the system which has an edge. That leads to confidence, because, and there's another thing in trading which is basically, so confidence also I can drill down more deeper when it comes to psychological aspect, is there's something called as competence hierarchy. Okay, I can just show you what it is. I mean, in any area of sports or something professional where there's a lot of skill involved, there's something called as, competence hierarchy. I mean, you guys might have come across this. So basically, what unconscious incompetence is you don't know that you don't know. Okay, and you're trying everything. Okay, and next stage is conscious incompetence, which is basically you realize what are the things you shouldn't do. You gain the knowledge from the bad, doing all the wrong things. You gain understanding of what you have to do. You realize your incompetence, where you're lacking. So the next stage from that is conscious competence. So what is conscious competence is basically you got the right thing, right knowledge, and then you're applying that knowledge. So you're consciously, you still have to consciously take action to get the right result. After you get to this stage, you consistently perform. You perform well, you become profitable, and then you get to a stage where your process, your system becomes unconscious competence. This is the field of mastery where a profitable trading lies, I feel. Where you intuitively know when to trade, when not to trade. You have a feel for the market, you have the experience. This is the stage you have to get through to make it in trading. This is why they say trading is a performance sport. You have to, it is just like being an athlete or a sports person. You have to play at your best, and playing at your best doesn't have to be constantly taking action also, but also mastering yourself, like patience, discipline, and not just chasing for the result. You have to enjoy the process. You have to enjoy the journey before you even reach the destination. So this is a part of confidence. And the next one is balance. Okay, see, every one of my point regarding the psychology, it's all connected. I just said in the above, to gain confidence you have to master yourself. So I think balance comes with the same aspect. It's not just to focus on trading, because there's nothing much to do in trading other than waiting. So you have to have other areas of your life you know balanced, like your health, your fitness, or even your mind, what you feed your mind, because everything gets influenced to the market and the way you trade. If you are not a optimal person, if you are not in a higher elevated stage of your mind, you'll keep end up doing shitty mistakes, bad mistakes. You'll keep looping over and over and over till you change yourself. You won't change your trading. This is what I've learned, because I had to constantly overcome myself to even get to this point in trading. And this thing can be short for few people, like a short journey for few people, like they quickly figure things out, or it can be long for many people. Because everything, the way we have been programmed in our life, is completely against what trading is. Trading is very counterintuitive. Like, what usually people think is right is not going to be right in trading. You have to think very counterintuitively. So to get to that point of counterintuitive, you have to have that balance and order within yourself, because the market is very chaotic. And if you are chaotic within, if there is no balance within, you can't see the market clearly. You can't see the distortions which the market creates. Because the thing with markets is, there is an order within that chaos. Or you can put it the other way around, there's chaos within that order. Or it sounds better maybe with, there is order in that chaos. So trading is all about finding that order in the chaos. And without having a balanced approach within yourself, you can't find that order within that chaos. Okay, so let's get on to the next point, which is the final one: simplicity. So basically, these are my 6 principles for my trading psychology. And when I say simplicity, keep everything simple as possible. To make money in the market, you have to keep things very simple, because it is very simple. The more we complicate it, the harder it gets. And I can go about more examples to this. So yeah, with simplicity it's just keeping trading simple as possible, taking 1 to 2 trades a day maybe, or holding your trades, limiting your trades. These are the simple things that leads to profitability in trading. And most of the time we know what we have to do, but we don't do it. And this is not your fault, it's because of our programming. Like I said, I think we humans are like computers. The human mind is like a computer. Whatever you get programmed to do, you keep doing that over and over. If you program yourself in the right way, you keep doing the right things over and over. If you program yourself in the wrong way, you keep doing things in the wrong way over and over. And another thing is, I can show you the path, but you have to walk the path yourself. You have to gain the experience. Like, I can give you all this framework, but you have to delve deeper in yourself to figure this out, because you have to align yourself first. This is just a framework, I'm giving from my own experience. And again, coming back to the confidence part, like Malcolm Gladwell, I think he wrote the book Outliers. In that, it has said, like, to master anything, you need 10,000 hours, of work or effort in your craft. I mean 10,000 hours is nothing. Like, let's say compare like boxing. Boxing is similar to trading. I feel most of the sports is somewhat similar to trading, the way the mental approach works. And in boxing, Floyd Mayweather, he, I think, trained since 7 years old. He started training his boxing, and now you know why he is 50-0. He never lost in his professional career. And when he started his professional career, he already had 12 years of experience, starting from the age of 7 to 18. So you can imagine the level of mastery he already had before he got into professional career in boxing. And this is the thing with trading, and the secret of Floyd Mayweather to be 50-0 was he was very defensive. He was a defensive mastermind when it came to trading. There is none like him, and his record speaks for itself. People can say anything else they want, but his record speaks. And his style of boxing is very defensive. He wouldn't take a hit, and he would hit. That's his, skill and ability. If you've seen his clips, he would defend himself so quickly and so agile. Opponents wouldn't even be able to touch him, and then he counterattacks them. After the opponent reveal their card, he takes the action. This is how you need to be in trading. You can't, attack without knowing the opponent's move clearly. You have to see the opponent's move clearly and then take a counter attack. And I think the philosophy is similar with trading, okay? That's what I'm just trying to say. Yeah, I think I've gone over everything which comes in my trading psychologist system, and maybe I will go over more if there's anything else that I want to discuss regarding trading. If I want to talk, there's a lot of things I think we can go over, but for now I think I'll keep this as this video as short as possible for now. It's already been 30 minutes or so let's catch up in the next video, guys, and take care. And if you have any questions or queries you want to ask me, just comment below. I would go on. Or if you want me to make a specific video regarding certain things, let me know. I'll go over it. So this is it for now. Take care.